the market structure. This is the last of the core concepts of price action. And even though we have already, to a certain extent, explained it, okay, we got different key trends, we got an uptrend, we have a downtrend, and you already know that when we are uptrending, price goes from lower to higher, and when we are in a downtrend, price goes from higher to lower. Even though it's repetition, please understand as well that whenever we are in an uptrend, or this is actually very important to understand, of course, whenever we are flipping, so to say, the resistance levels to so-called support levels, when it comes to the structure, and especially when we are in an uptrend, okay, so this is characteristic for an uptrend, these circles, these are so-called swings, because you can see from these points, we are clearly doing something significant. We are peaking out, we are bottoming out. We are peaking out, we are bottoming out, and so forth and so forth. However, these circles can be given a specific name. And again, this is just very high level. This can be considered to be a higher high. Why? Because this point, this higher high, is obviously higher than this point, which kind of makes sense. It's very logical, it's very, it makes sense, of course. Then after having made the higher high, you create a local bottom, and this is called a higher low. And every single time when we see these two structures being respected and being formed, as long as we see the higher high and the higher lows being formed, that's how we know that an uptrend remains intact, okay? But of course, this can never go on infinitely. At a certain stage, you will just lose levels. And what happens? Then, as you can see, especially when it comes to the so-called market structure, we obviously create a reversal, but then again, it also reflects on the so-called market structure. So instead of creating higher highs and higher lows, first of all, we are breaking through levels, and of course, a confirmation of a loss. That's a strong indication, a very first signal of weakness, okay? But then again, these circles it's very important to understand. So instead of creating higher highs and higher lows, we are pretty much creating lower lows and so-called lower highs. Okay, why? This point, and this might sound, this will become a little bit more, not necessarily complicated, I guess, but this point is a lower point than this point. This was the highest high, the peak of pretty much everything. But then again, as we failed to get above and create new higher highs, that results in lower highs, lower lows, lower highs. So these are pretty much just the main characteristics of an uptrend and a downtrend, okay? So if we are going to apply the theory into practicality, I would highly advise you guys to identify the key trend, the main trend, on at least the 4-hour or the daily time frame. Why? It is actually very important to respect the trend. It's very cliche to say, maybe you've heard this before, but the trend really is your friend. We can be stubborn, we can try to counter trade when we are simply in a higher time frame, uptrend or downtrend, you need to respect it until it gets invalidated, of course, and that's something that's very simply visible, okay? So in this case, if we just start with this circle over here, okay, on the top left, and we are going to follow the price action in chronological order. Very simple, we can clearly see that this is a so-called higher high in comparison to the previous high, okay? So this is our starting point. So from this point onwards, if we just make use of the arrows, we can clearly see that at some point we are losing levels and we are creating, even though it's not necessarily picture perfect, you know, in terms of price action, we are creating lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So this is a characteristic of a downtrend. These are the key swings, key points within, of course, the market structure. And as soon as you are breaking above this, okay, as soon as you break above this, that's eventually where price tends to change from trend. And that's how you eventually get in an uptrend. There you go. Boom. And then, of course, last but not least, So hopefully by identifying the key components or the characteristics, the swings within a specific trend, it allows you to make better decisions. It would be highly advisable to take shorts or to be more short biased, where you're expecting price to go lower when you're in a higher time frame downtrend. And I would highly advise you to look for specific long trading setups where you're looking for more upside when you're obviously look in a higher time frame uptrend. Because again, you need to understand that that's again something that I can speak from experience as well, but many people are losing a lot of money, a lot of capital. They are losing the underwears by constantly doing the counter opposite. Okay, so whenever you're in an uptrend, people are shorting, and then eventually you will get stopped out 20, 30, 40, 50, maybe even 100 times before eventually the moves are given that you desired all the time. But then again, you lost all your capital. Most definitely not worth it. Respect the trend, understand the higher time frame trend, identify the key components, and then you will be able to make it work. Let's go.